screen, hear voice. Yep. Okay, welcome back. All good to the live room. Happy Tuesday to you. Exciting day. We have a lot of news here in the market coming out. I'll read to you a little bit about what's on the radar and what has already happened. But if you guys remember, and by the way, I guess I should ask this: anybody brand new first day here before I get into my opening rant? First time here, welcome, Yassine. Welcome. What you'll witness here after my initial rant here in the live room is that we come in here, we do daily analysis from both a swing trading and a day trading perspective. So you'll see me start on the higher time frames and work my way all the way down to the lower time frames, showing you the process in which I go through to identify high probability trading opportunities, and hopefully you use it as a tool to kind of further your education. So many of our members here are premium members. They're going through the courses, they're taking their time and working through the process of learning how to trade. And it's a chance for them to really practically apply what they're learning in the courses to the real live market. So it's pretty cool. I think application is a massive part to learning. It's one thing to learn something, you retain so much more when you actually do it. So welcome. I don't know what level of trader you are, but if you are brand new, try not to become overwhelmed, meaning you may hear a lot of terminology that is different. It may not make sense. You'll see a lot of tactics and techniques. If they don't make sense to you, don't worry about it. Don't get frustrated. Don't say, oh, I don't get it. I'm too dumb. I can't be a trader. Understand there's usually about a 2-week learning curve where the process starts making complete sense. And before you know it, you're predicting the things that I do before I do it. And if you are going through a course currently, I always say just focus on the portion of the course that you're currently on. So if all you've learned about is reading the ebbs and flow of price, focus on reading the ebbs and flow of price, and we can worry about the rest when you get to that section. And obviously, if you are experienced, feel free to share ideas. Our traders do it all the time. Ask questions, share ideas. This is kind of an open forum. But I want to take a look at the euro dollar first because we're heading into a zone that has my interest. But do you guys remember me talking a few weeks ago about the NCAA, the college system here in the U.S., and one of the acts that was getting passed so people can actually get paid? We had a good conversation. Many of you guys that aren't familiar with it, you were kind of appalled. Like, wait a minute, you can't make money off of your likeness? Well, the NCAA is basically the governing board of college athletics over here. They're the ones that are supposed to keep everything in line and blah, 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 blah. But what happened is in California, they just officially passed it now, an act called Fair Pay to Play, where, long story short, previously, as an NCAA student athlete, you cannot make money off your likeness. So, for example, Naomi, if you are a star football player for your college, and there's a grocery store that says, "Hi, hey Naomi, you know what? I'd love for you to be in this commercial. You know, you're a local hero because the whole town knows about you. Can you do this commercial for me?" Right? You can do it, but you cannot get paid for it because the NCAA owns your likeness, and you're not allowed to profit off your likeness. A bigger example was players a long time ago. There used to be college video games, and these players would literally be in video games. With their faces and everything, and the video game company would make money off of it, the NCAA would make money off of it, and the player would get nothing. Or if you sign an autograph, if you give away an autograph, you cannot get paid for it. The school can, the NCAA can, but you cannot accept payment. Basically free labor. But California, because California does what they want over here in the States, they just passed a law, and so California athletes will be able to do that in 2023 with the hopes of that the NCAA will take action and kind of open it up across the country. So it's cool. I'm a big fan of inspiring entrepreneurship, right? I think if you have a dream, if you are a player and you want to open a clinic to teach people, and you want to say, hey, I'm a star soccer player for this team, come to my clinic so I can start my own side business and side hustle. That is beneficial, especially since, I don't know, have any of you guys played sports at a high level? Yeah, okay, there we go. D1, yeah, I'm a D1 soccer player. Yeah, then you should know this, right? if I go to school on a violin scholarship, right, to play music, right, that means I'm getting paid to go to school to be in the band or the orchestra, whatever. I can open up my own clinics. I can do this. I can do that, right? However, same thing if you're on an academic scholarship. However, if you're an athlete, you cannot. And the one thing that people don't see is that if you are an athlete, especially at all levels, but especially at a higher level school, you are a full-time athlete. Oh, athletes can get a job. No, you can't. No, you can't. You've got school, you've got practice, you've got nothing else. Trust me. So you actually don't have the same opportunity that normal students have, which makes it very hard for some athletes. And a lot of them get the limelight, but a lot of these athletes are going hungry because they can't afford to buy extra meals and stuff like that. So it's an interesting dynamic, but the NCAA is for profit. We all know that, even though they're a nonprofit. So anyway, so that was on my mind. I also saw a cool quote this morning. I'll read it quickly, or a headline. It said, "The dollar, the cleanest shirt in a laundry basket." I think that sums up pretty much the financial markets right now. So let's get started. So I do want to get the euro dollar while it's in the zone, but we do have a few, we had a rate cut this morning from the Australian pairs, Australian dollar. So you're going to see a lot of massive bear candles on the Aussie pairs. Aussie's bearish anyway, in my opinion, so this kind of pushes it in that direction. Many of the Aussie pairs are at many levels of structure, or at important levels of structure. So there could be there are some good structure trading opportunities right now, unless things have changed. But if we're able to break those levels, could be some very good opportunities to short the Aussie. We have a bunch of Fed members talking today. GDP coming out for Canada, ISM, PMI coming out for the dollar. I believe Draghi's speaking at some point today. Could be wrong on that. I thought he was. I'd have to double check. But a busy news day. But let's get started on the euro dollar, because this is the pair that intrigues me the most. Euro dollar is coming up to a previous zone of structure. Cody says he is. Okay, perfect. He says, "I can't get a job. That's why I'm starting trading. If the university finds out I have a job, my scholarship is gone." It's ridiculous, man. It's ridiculous. But our most recent move in the euro dollar is what? Just barely, but it is what? What do you guys hear? This is that IPDE process. That stands for identify, predict, decide, execute. So we identify what has the market done. It has just closed below, right? So we see a lower low, lower close. We make the prediction that price is likely to continue lower. If price is likely to continue lower, then where is price likely to continue lower to? And we see that we're kind of right at structure. It's not the cleanest level in the world. I've had 108.50s on my radar the entire time. So we're kind of in this inside level of structure, but there is room to go lower. Just not, it's not going to be easy. I'm rushing through this a little bit because price is moving right now. If we go down to the 240, you're going to see a little bit of a retracement right here. Again, lower low, lower close, a little bit of a kind of a consolidation and a retracement. And if we head over to the 60, this is where things get pretty. What do you guys notice here on the 60? This kind of goes off our conversation yesterday about, we're talking with Andrew about consolidation zones and how support turns to resistance and resistance turns to support. You guys notice anything here on the 60? We are returning to a previous level that was important. Yeah, not only do we have these low wicks down here, right? So test of structure, test of structure, test of structure, buying pressure, buying pressure. We hold, we retest, slightly hold, we break, and then we try to retest on the other side. And the same thing, just in the opposite direction. Now we have these high wicks to the upside where we have selling pressure protecting this level, selling pressure protecting this level. So a good example of I call it a structure swap because, again, I'm not creative with ideas. But a good example of, you can see the buying pressure at one level. Once support was violated, we see the selling pressure at another level turning into resistance. And now price action is returning to that level, right, to this zone. If we kind of just mark out these wicks, right, And what does it look like we're currently doing? Yeah, well, currently looks like we're doing the same thing. We're getting another rejection. So this can offer a selling opportunity. The most aggressive way that I can get involved is a lower low, lower close. But say you're someone that can trade just off a single candlestick formation, say a pin bar, right? We have about 15, 17 minutes left before this candle closes. So we got, you always have to wait for the candle. But you can look for an opportunity where you sell it right here. Where do you think stops would need to go? I'm looking at the range bar. We did not go overbought on the range bars, which is kind of odd, but that's what's stopping me from getting involved in the range bar chart. But we'll look at the 15 and the 5. But yeah, they can be above previous structure highs right about here. Now, the question you have to ask yourself, let's just do one ATR. That's going to be 23. Actually be a little bit higher if you're doing an ATR-based stop. The question you need to ask yourself is, well, let me ask you guys this. There's 3 things we need to know before we ever enter a trade. Entries, stops, and targets, because that's what's going to allow us to see our risk reward, as Ale just mentioned. So the 2 easiest I always do this. I always do entries first, and then entries kind of, they can wiggle around because we're predicting. Stops are the easiest for me. Why? Because I have strict rules for stops. They're always in the same place. So that's the easiest one for me. So the question is going to be, where are you taking targets at? If you're looking at a situation like this, and let's just measure this out here. Again, let's just assume you're entering at market, and I'll show you guys kind of the situation that I'm in. You're looking at a risk that looks at about right here. Now, the next thing is going to depend on what type of trader you are. We had a conversation about this in Monday's Q&A. If you are someone that is just shooting for a retest of the lows, right? A very conservative, what we call trend continuation trader, not trend following trader, you're going to be looking at a risk reward that looks like this. And this is going to be less than a 1-to-1. Now, if you're okay with a less than a 1-to-1, then that's fine. This is a takeable trade. However, I know that many of you guys have rules that say you require a minimum of a 1-to-1 risk reward, which means, can you take this opportunity? No. And this brings up another good point. I was speaking to one of our traders on the chat yesterday, right? I encourage you guys to always shoot in ideas, charts, mark them up, put them into the chat. If I'm there, Jason Greystone's there, if Charles is there, obviously we're going to respond to it. But feel free to use our members, right? The members of Tier 1 Trading is the most powerful asset we have, right? I know you guys love the training. I know you guys get googly eyes every time we put out new content, but you guys are the key. You guys are the key. Because guess what? I've been teaching for years. I was teaching well before Tier 1 Trading, right? And there's a reason that we've had more success here than in past companies. So we had a trader that was using that asset and shared a chart of a trade, said, hey guys, looking at dollar yen, just want to know what you think of this trading opportunity. So of course I responded and say, well, can you explain your rules? Because he just showed like risk reward. And one of the things that I noticed was that I asked him about his target placement, and he says that his target placement is at a 1-to-1 to his risk reward. Right? Do you guys understand what that means? Yep. So what means what the trader is doing is they're measuring out their risk. They're taking their risk, and they're making sure their targets are at a 1-to-1 level. Right? And it's not a bad idea because let's just put it in perspective, right? If you're taking a 1-position trade and your risk reward is always 1-to-1, then what type of win percentage do you need in order to be a profitable trader? Yeah, probably about 52%. And I say 52% because, there's fees and commission and slippage, all that stuff. 51 would probably have you right at break even. So let's just say 52. But basically, if you win more than 50% of the time, you'll be profitable. So a very easy strategy to test. I've done stuff like that in the range bar charts. You just test it And if your win percentage is more than 52, boom, you've got a profitable strategy. And the higher it is above 52, the more profitable you are, right? The bigger your expectancy is going to be. However, what do you think the problem I had with this was? And again, imagine this, let me use a different color. This is the reward. What do you think the problem is with, at least the problem that Akil would have, knowing how I think, with just taking a one-to-one? Latch hit the nail on the head, right? Random target location. And I'm a big fan of this, right? I believe that a target should be at a level in which you predict price to go to. I think that if you have a target that is at a level that you do not predict price to go to, what is the point of the target? That is like betting on a team that you think is not actually going to win, right? That is like me putting a lot of money on Everton to beat Man City, fully knowing that I don't think it's going to happen, even though they played very, very well. They played a good game. Well, I was gonna say the Cincinnati Bengals versus the Pittsburgh Steelers, but both those teams stink this year. So I went with Everton, Man City. Although Everton played very, very well, I am proud. However, the one thing I have, and luckily it was a Sunday game, right? No, Saturday game. The one thing I hate about the Premier League is that it just ruins my weekend because the games are so the games are early my time. Like I'll get a game 7:30 or 11:30 in the morning. So when ultimately my team disappoints me, I'm just pissed off for the rest of the weekend. At least the NFL, right? NFL doesn't come till Sunday, so it's at the end of my weekend, right? Shoot, we get a match at 7:30 on Saturday. I'm just pissed. That's why, if you notice, I try to get those trading edge videos out before that because I don't want to do anything. I just want to be angry. But anyway, so your targets are at a random location, and on the example of the trade he gave me, Price did this, right? Price came here, and then it started reversing. And I'm like, dude, well, why was it right here? He's like 1-to-1. I'm like, well, wouldn't it be safer if you're going to have it right here? What do you think would be a safer place for your target to be at? Maybe a little bit higher at structure? Yeah. So it's important that you don't force the trade to work, that you don't just say, I like this trade to kill, but it's not 1-to-1, so I'm just going to stretch my target out a little bit and have it right here. Because that could be the difference between you predicting a place that price is likely to go versus you just picking a random location. Now, real quick, Naomi says, but aren't patterns random because it's just a fib number that has a proven edge? No, not at all. Nope. Fibs are not random. Fibs are not random. Fibs are based off of what? What are fibs based off of? Price. Based off of price, yeah. Right? A Fibonacci retracement level is based off of the swing of this leg. Based off of the swing of this leg, the length of this leg. It's a specific ratio based off the length. Yeah, so no. Not random at all. Not random at all. Even like moving averages, which I'm not a fan of moving average personally, but moving averages aren't random either. They're based off something, right? They're based off price movement. RSI, based off price movement. ATR is price movement, yeah. So all those indicators aren't random. They're based off something. And I guess you can make the case that, okay, well, a target level down here is based off something. It's based off a risk reward, but it's not based off anything price related. Does that make sense? It's not based off price movement. It's just a random, it's based off of a risk reward and not actual price. Yeah. So, and I was telling the trader, no problem, Alex. It's just small things. It's small things like this, right? These are the things that make you kind of better in trading. It's not typically massive things. It's like, and with the traders trade, the concept was all correct, right? It was a pullback trade into structure. Now it's just like the small things where it's like, adjusting my targets a little bit. Or once you get more experience, hey, moving my stops up, getting a little bit safer with stop loss placement, a little bit making some changes to stop loss placement. Small stuff that makes a difference. So, yeah, so if you're looking for a move back into structure, especially if you're looking for a lower low, lower close, probably not going to get a 1-to-1 here. Obviously, if you're looking for an extension down, then you have plenty of room. Because if you're looking for an extension down, let's just go off of our fib level, right? If we take a look from our biggest swing, our last swing high to our most recent swing low, right? We're going to have that 127, which is the first kind of fib number you pay attention to, right around that 108.50s level that we talked about. So if you're a trend following trader, now having a 1-to-1 isn't even a question, is it? Now, for me, right, unless I'm on the range bar charts, I need to take first targets off at previous structure low, right? That's a rule that has not changed yet. I don't know if it will ever change. It's just I'm a counter trend trader by nature, so it's what I have to do, unfortunately. So I can tell you already that this is not going to be a trade I can most likely involve myself in, right? A lower low, lower close is my most aggressive way of entering, aside from like a limit order for patterns, which means my entry realistically probably won't be till down here. So most likely there's no way I can get a trading opportunity. Now, I can look at it on a day trading opportunity in a lower time frame, which I probably should be watching right now instead of explaining to you guys about trading. And that could be an opportunity for me. Hold on, let me actually do that. But I do have something else that I was interested in. And we don't have that overboughtness here on the 15. So on those lower time frames, I need that RSI to go overbought. And we don't have that. So that's gonna stop me. Not even on the 5. It's kind of crazy. Okay, we'll look at that in a little bit. Here's another idea I was flirting with, and this is a good example for you guys that are new. I want to get in this very, very badly, but guess what? I can't. So if you kind of sense the frustration in my voice, I want to be in this trade. I want to be short. But I can't. And I'm looking for every reason possible. I'm looking on 15, I'm looking on 5, I'm looking on range bar chart. I can't. Yeah. But one thing that I was going to say, and we're moving against us right now. Here's something. I know Cody looked into this. Or at least is familiar with this. Cody's in the room today, right? Yeah. So let's say we had this pin bar. Let's say it was up here. Let's say we didn't form kind of, or let's even take this, right? Instead of looking for a lower low, lower close, a more aggressive reason for entry, I guess this would be right before the lower low, lower close, but less aggressive than the single candlestick formation, will be putting a sell stop right below the close of this candle. So as soon as this candle closes, and you got to be quick, obviously, especially the lower time frame you go to. As soon as this candle closes, right, you choose a pip amount, 2 pips, 5 pips, and you put a sell stop below the lows. So it's a little bit more conservative than a single candlestick entry. Why? What makes it more conservative than a single candlestick entry, but more aggressive than a lower low, lower close? If you guys that are new, a sell stop is an order where you sell as the market is going in your direction. So it's not an actual stop loss, even though it has the name. So a single candlestick entry is an aggressive way, right, to get involved. This is more conservative because instead of just entering on the single candlestick entry, you have the single candlestick entry, and then you're waiting for price to take out the lows. So it gives you a little bit more confirmation that price is moving in your intended direction. Does that make sense? It takes out the lows of the previous candle, giving you a little bit more confirmation that price is likely to continue in your direction. Now, it doesn't give you the same amount of confirmation as a lower low, lower close, because obviously price can do something like this, where look, we took out the lows on this previous candle and then exploded up. But that's why I say it's a little bit more aggressive than a lower low, lower close, but a little bit more conservative than a single candlestick entry. Does that make sense, guys? And that's something you can, we do talk about that in the foundation too. that's something you can use for any entry type. You can use it on a single candlestick entry. You can use it after your lower low lower close. You can wait for a lower low lower close, and then still use a sell stop right below if you want a little bit more confirmation. Something you can even use on double tops and double bottoms is a little bit different there, but you can certainly use it. So something, we were talking about continued education this morning on the chat. Something I was considering looking into. For, obviously it would be for very specific opportunities, but one of my favorite moves is a pin bar reversal at structure. So imagine this yellow line being the structure level. Let's say we're in a bullish trade. We're looking to get bearish. So price action comes up. This is one of my favorite entries to a major level of structure that I identify. And then we do something like this. You guys ever see this before? We see that a lot with the kiss of death as well. Yeah, I like that. Now, right now, I require, again, lower low, lower close. So I like that. And then I like the confirmation of a lower low, lower close. But sometimes, right? Sometimes what happens with this lower low, lower close? We all know Akil says, right? Good moves don't last, right? So sometimes we see this, right? And you're like, no, my risk reward. Because every time the market creeps down, right? It's increasing your risk, right? Your initial risk is up here. Right? So your initial reward is down here. And you have this cool ratio. I'll just drag this over, right? You have this cool initial risk reward ratio and you're measuring out. And you're like, dude, this is awesome. Risk reward is through the roof. And then as it creeps down, what happens? That reward gets smaller. That risk gets bigger. And you're just like praying for it. You're like, no, stop. So it gives an opportunity where instead of waiting for that move with a sell stop, guess where you're involved at? You're involved as soon as those lows are taken out. It's a little bit more aggressive. So it's something I'm considering. Nice doji candle just printed on the hourly, by the way. Something I'm considering to add to my arsenal. Again, I'm for you guys that are new in my trading journey. I started off after I was bad for like many years. I got very, very, very conservative, where I needed like all this, the sun and the moon and all the planets to align in order to take a trade. And then once I kind of found myself as a trader, once I hit my groove, right? Once I hit my groove, I became more aggressive. I became more conservative with the trading opportunities I take, but more aggressive with how I take them. So I try to limit myself to what I consider to be only the best trading opportunities. But when I see that best trading opportunity, I don't want to wait around for it. I want to get in. So I know what I like and I go for it. I know what I like and I go for it. Latch says Hassan, and for you guys that are new, again, this is the live room where, it's not a signal service. I do look for trading ideas, but it's, for me, the main goal has definitely gone more to the teaching aspect. And I think you guys have appreciated that. So it's hurt my trading a little bit. I do miss trading opportunities. But I try to look for the most teachable opportunities. I think that provides the most value aside from just being robotic and being like, here's what I'm looking to trade, right? So that's what it is. If you're looking for a signal service, go someplace else. Last says Hassan has got an interesting idea of when to use sell stops, basically following 2 rejections, then a sell stop in a certain location. Can't fully remember concepts of the concept is decent. Yeah, same thing. It's he's looking for an aggressive entry. Those 2 rejections are telling him that price obviously is respecting that level. And then he wants to get involved right away. But instead of just getting involved right away on the close of the candle, again, he's just looking for a little bit more confirmation that price is continuing that direction first. So like I'm trying to look for a good example right here of a trade that would kind of which would kind of screw you if you're waiting for a lower low, lower close. Trying to think of a good level here. Here's an extreme example. This is probably the most extreme example I can give you guys, right? So, you guys see any 3-bar reversals on your screen? Perhaps the big one in front of your face, right? So, a good example of, let's say you're looking at this. This was at a previous level of structure, and like you saw this rejection candle, and you're like, ooh, tasty, right? A sell stop, right, would get you involved right here. A higher high, higher close would get you involved right here. An extreme example, but this, I mean, if this doesn't make the point, I don't know what does. So there's benefits to it. But there's also risk. Also risk, guys. Also risk, because you're more aggressively looking for a trade. All right, so let's go down to a lower time frame here. Again, if you're a trend following trader, I would still look for that lower low, lower close. Or here's an example where that sell stop would be potentially hit. And you can look for a downside move. We go down to the 15. I thought we'd see some overboughtness on the 15. That was going to give me my excuse to get involved. Guess what? We never did. We rallied up to that zone. And we actually never got overbought. Which isn't necessarily a negative thing for a trend continuation trader. Let's see what we're holding here. We did get above that 666, so 667, excuse me. But yeah, I never got any entry signal here. Here's another example of a sell stop right here that could have been used in hindsight. So we'll see if there's another opportunity. We'll see if we push back up here on euro dollar. I do think it's a decent level. Again, just based off the higher time frame, and this is foundation course stuff, guys. This is reading the candlestick story. I can't think of a better example. And even if we kind of look back in the past, I mean, look where we come to. This is a better example of just seeing that, people talk all the time. Oh, what do past results mean, Akil? There's no point in backtesting because the past won't tell you anything about the future. Sure, it will. in almost every aspect in life will the past tell you about the future. Like, what are they talking about? What are they talking about? Let me ask you guys this. Anybody ever touch a hot stove? Right? Anybody ever touch a hot stove? What happens? Does it hurt your hand? Yeah, right? Next time you see a hot stove, do you touch it? Probably not. Why? Because you learned from the past. The past has told you if I touch this hot stove, it burns. So you don't do it again. Right? There's so many things the past can tell us, right? I do it a lot for, driving, for example, right? Guess what? If I have a meeting at 5 o'clock, here's a better example. If I want to go for food, it's a more realistic example because I like my food, right? There is a lunch let out, which means everyone goes to lunch around like between 12 and 1, right? They leave their offices, they go to lunch, right? All of the streets are massively packed, right? Traffic jams, right? It takes about an hour to get someplace that is 20 minutes away because traffic is backed up. Every day between 12 and 1, right? I've experienced this in the past. So if I plan on going to lunch today, do you think I'll leave between 12 and 1? No. I leave a little bit before 12. Or I wait until after 1. Why? Because the past experiences taught me that if I go out between 12 and 1, I'm going to get caught in traffic. The past has taught me that. Now, do I know that traffic's going to be busy that day? I don't know. I don't know for sure. Shoot, everyone could be dining in. But I can make the most educated prediction. I can make an educated prediction that this is likely to happen because in the past, this is what has happened. Same thing in the markets, guys. We see this in the market in hindsight. We see this on the secondary test here. We can probably make a prediction that we're going to see some type of reaction. Now, do we know if it's going to hold? No, we don't know that. But we're just looking to make educated predictions. We're looking to make educated predictions, and then we're looking for opportunities that meet our rules. And our rules are all based off of an edge. Our rules are all based off of a past performance, where it's like, hey, when I see this, this is more likely to happen than that. And if you consistently play those odds of this is more likely to happen than that, you're probably going to have a profitable system, unless you self-sabotage, of course. So it always, it makes me chuckle when I hear people talk about the past doesn't matter. Like, what else are you going to use? What's the answer then? You're going to make a time machine? You're still going to the past. Makes me chuckle. Last, I'm never getting my hair cut on Saturday again. Past experience. So, all right. Any questions on euro dollar? Again, if you're looking for a lower close, you got it. Trend following traders, for you guys that can take extensions lower, I still think this is a valid opportunity for you. Hopefully that candle doesn't, continue down too much, but still a valid opportunity. Questions on euro? All right, let's go to let's get some of these Aussie pairs out the way. Let's go to Aussie. Let's go to Aussie dollar. Aussie dollar and Aussie Canada are both flirting with structure. So let's go to Aussie dollar first. AUD, USD on this higher time frame. All right, so we'll visit the 240 level later, but you can see we're at a previous level of structure. So Aussie dollar, once again, we're going to go through that boring IPDE process. Identify. What's price doing, gang? I got to get some new podcasts ready, man. It's a new month. It's a new quarter. I'm making a habit of getting my entire month of podcasts done in like the first week. Then I can sit pretty for the rest of the month and be lazy. We are retesting previous levels of structure, right? Similar situation to the euro dollar. We've got a rejection level. You see the wicks. I know you see it, right? You see the wicks down here. We're retesting this previous level of structure, which would offer a structure-based trade, a buying opportunity here for you guys that are counter trend traders. Right? Again, the Australian dollar cut rates this morning / last night, depending on where you're at. They've also come out and said we want to keep rates low. And this is a negative sign for the Australian dollar. Again, in my opinion, everything that's happening in Australia is negative already. So we're seeing weakness. There was some love for the Aussie a couple weeks ago as the trade talks became more stable. The trade war talks became more stable with China, the U.S. and China. Saw a brief little rally, and now we're sinking. So if this is going to be a decision point, if we hold this level, this is going to offer a structure-based trade. I can tell you right now that if we get a structure-based trade, here's the next shelf we can look for. A retest of these lows right here at about 67.47s. If we break, we can potentially go lower. So what I want to do is I want to zoom out my chart. When I ask myself, like the great Ludacris once said, how low can we go? And I'm going to need to go over to trading view because I'm going to bring up a weekly. White charts, cover your eyes. Cody says, banked 40 pips on that bad boy this morning thanks to news. Was in it since last week. Well done. Greg says, Coach, I see the rejections, but it's testing again. This makes me less confidence price would hold there. Yeah, that's why it's a decision point. We'll see. We shall see. We shall see. All we can do is make a prediction. All we can do is, in my opinion, use that if-then syntax, right? If we hold, then this is how I can attack it. If we break, then this is how I can attack it. Here's the cool thing about being a trader, right? I always say that we're mercenaries in the market, right? Ask me if I care whether it holds or breaks. Ask me. Do you guys have a question for me? Anything you'd like to ask me? No, I don't care. I don't care. No, I don't care. All I care is how I'm going to react to it. If we hold, then I do this. If we break, then I do that. Now, maybe I value one versus the other. Maybe I see a lot more downside potential than upside potential. So I know if I get a downside trade, right, that opens up a lot more room than the upside trade. So maybe I'm hoping that it breaks. But yeah, it doesn't matter. Yep. We go through the process. We go to our plan. We ask ourselves, how can I handle each situation? If we can only take one side of it, meaning if you can only get bearish, you only focus on the bearishness and wait. If you can only get bullish, you only focus on the bullishness and wait. Avery loves the white charts. I do too, and my eyes don't though. That's the one thing. My eyes don't. So I'm on the weekly here on the Aussie. And you can see here's that level of structure, a little bit lower that we would need to break. Now, we're not in clear, right? We are at a previous level of consolidation. This is a large zone. So it's not like I think the Aussie Canada where there's room for days, right? We do have this zone right here. However, within that zone, if we're going to really pinpoint some levels, there's a minor level of structure at 65.80. And then really the lows, I don't know if you guys can see. Let me zoom in. There's a whole bunch of double bottom right down here. Is at about 63.70s. So there's certainly room to go lower. Certainly room to go lower, right? 65 flat is right kind of in the middle. And then 63 highs, let's just say 64 even, is right at the lows. So again, it's one of those situations where is it clear sailing? Not necessarily, but there is room to push down another, what do we got, 67 right now? Another 200 pips. Well, after we break it, another 100 pips, whatever. So there is room to progress lower. Cody says, if then is the best phrase that has increased my trading tremendously. Yeah, it's increased my life, man. I do everything in life based off if then. I always measure risk reward. Like I'll cross the street and I'll be like, can I make it? I think I can, but if I don't, I probably wait. Yeah, it's definitely yeah, life has changed because of trading, measuring risk reward. I use it as a speech all the time when we're doing one of our deliberate success meetings. Greg mentioned this. Greg and Gabby were getting at it a little bit. No, it wasn't Greg and Gabby. Was it you, Greg? It was someone on Twitter getting with Gabby about they kind of said it was something about female traders and male traders, and Gabby's the wrong person to say that to, and it wasn't Greg. I think it was Twitter. I was tagged in the conversation for some reason. I wasn't responding because but it was interesting. It was interesting dynamic. And there is a difference between men and women. And let's not. I'm not going to be soft around the topic. There is a physical and psychological difference between men and women. It doesn't mean for everyone, but there is one. In general, men are higher risk takers, for better or for worse. Women in general are less risk takers, for better or for worse, right? There's a reason that insurance rates for males are higher than for females. Why do you think that is? Yeah, because in general, we stupid. I've accepted that. In general, we don't make the greatest decisions. It's true. It's true. And it would be naive to think that doesn't carry over to trading. Right? I always said this. I always it's hard because there's no, I guess, point to this conversation. But I wrote down Aussie Canada real quick. Hold on, Aussie dollar. There's no real point to this conversation, but there's always been a discussion of who is made up to be the better trader in general. Women traders versus men traders. I'm going to put you guys in a very awkward position. Who do you think? I'm going to put you in an awkward position where you're going to offend someone no matter what. Kids. I think kids would be the best traders. Kids that do not have a concept of money will be the best traders. I always wanted to open up like a sweatshop. A childcare working facility where we'd have a mechanical system and we'd hook it up and instead of like red and green arrows, it'd be like teddy bears and whatever, and just give the kids simple rules where it's like, when you see the teddy bear, push this button and it like buys. And when you see this, push this button and it loses. And it would be great because guess what? And you say, if you do it, you get a lollipop. Because the kids don't care about money. There's no emotional tie to it. They would just follow the rules. They would follow the rules 100% of the time because it's a game. And if your mechanical system works, it would just execute consistently. And if you execute consistently, you'd be profitable. Flash says, but then diabetes, yeah, but they don't get health insurance through us. So that's their problem. They should know what they're getting into. I will fully disclose that they will get candy and there's a risk of diabetes, and they don't care. But yeah, so Div Deep says women. Of course you would say that. It's interesting because if you think about it like this, right? So if you think about in general terms of just how, and we've been socially developed this way, men are bigger risk takers. Higher risk, higher reward. Women are better thinkers, right? They tend to think things out and make the best possible decision. Does any one of those bring more or less value to trading? Yeah, I would say they both have their pros and their cons. Let's start with the men, right? You need to take risk in trading, right? We are doing something and we don't know the outcome. What's more risky than that? We are taking action on something when we do not know the outcome. Pretty darn risky, right? It takes a lot of guts to actually, you can back test all you want. You can paper trade and demo trade all you want. I don't care. It takes a lot of guts to push that buy or sell button. Does it not? I mean, to this day, and I've been trading for so long, even now when I execute trades, there's still a little that going on. Like, top of the roller coaster, heart stopping a little bit, right? Because you're actually taking action. It's hard to get over that hurdle. Many of you guys have been in situations where you've seen the perfect trade setup and you just haven't pushed the button because you're a little nervous. So that's definitely a positive for men. That's probably a little bit easier for us to take that risk. The negative would be that it's probably a little bit easier for us to take other risks. What would be an example of another risk? I'll give you one. Not following your rules. Trading off like a feeling. Ooh, that looks like it's going to go up. Buy, yeah. Right? I don't know about you guys, right? The reason I ran my first marathon is simply because my friend challenged me. He's like, hey, dude, I'm doing a marathon. You want in? Hell no, I don't want in. I want to run a marathon. What's your problem? Oh, you're scared too. No, I'm not. And I signed up that day. Got me, right? It was that simple. It wasn't, who was it? Latch. I think it was Latch. When I did the push-up challenge over the summer, I was like, yeah, man, I'm doing 3,000 push-ups this month, right? Because I saw it somewhere. And I was just like, yeah, I'm going to do it. And Latch was like, well, I'm going to add, whatever, 5,000 subs to it. You're not going to do that, are you? Yeah, I am. And before you know it, now I'm doing sit-ups. Like, why the hell am I doing all these sit-ups, man? How did I get suckered into this, right? We just do it. We don't think. Maybe it was Dion, yeah. I hate whoever it was that did that. My stomach still hurts. But I'm chiseled. I look good in the mirror, so, pros and cons. So, on the other hand, where you have women that tend to think more, are in general, again, this is all general because not all men are like this, not all women are like this. In general, are lower risk takers, right? What do you think the benefits of that is in trading? What's the benefit of being a less risk taker in trading? More calculated, right? You guys are more likely to do your due diligence before ever investing. You guys are more likely to make sure that you've gone through all the right steps, all the right process, and you're doing exactly what you're supposed to be doing. There's typically not as much rushing into things. It's kind of like, okay, I'll be ready when I'm ready. And this could be, it's a small sample size, but even with coaching for this many years, I mean, the two people that I know that have back tested the most have been Naomi and Gabby. And I believe Sarah is one of them as well. All three of them have something in common. And I'm talking back testing for like multiple years to make sure everything is perfectly correct. Now, maybe all these people are just kind of thinkers as well, but I find it hard to, someone like Latch, for example. Latch does a lot of back testing, but guess what he also does? He's like, look, I'm gonna start a demo account, start trading it live while I'm back testing. Right? It's a little bit different. He's like, yeah, I'm gonna keep back testing it, but at the same time, I'm gonna demo trade it. So it's a little bit more calculated, which is a positive, but the negative is what? We just talked about you need to eventually take risks to get into a trade. The negative is that maybe a little overthinking happens, and because, especially in trading where nothing's ever going to be perfect, ever, no matter how good you get, it's a little bit harder to pull the trigger and actually execute. Right? Where you see that perfect setup and then it's like, that candle's a little bit, maybe I should test a little bit more. Yeah. Right? So in order to have a good trader, you got to find a balance between both of those aspects. So whatever side you're on, right? If you're on the male side or super risky, or just not even male, women, just in general, the super risky side, you've got to make sure you work on being a little bit more calculated and going through the right steps. If you're someone that is really, really, really kind of calculated and patient, you may have to work on your ability to take a little bit more risk. So whatever side you're on, left or right, it takes kind of finding that mesh point in the middle to be a consistently profitable trader. And again, even with the story I told you earlier, what did I say? When I first started trading, when I was really, really bad, super risky. I was just taking everything. And then I found out that wasn't the right way, and I went super conservative. And now I'm coming back to really finding myself where I'm a little bit more risky, obviously, in how I take trades, but more conservative in the trades I take. So it's finding that, imagine this Venn diagram, it's getting into that sweet spot in the middle. Did we answer who's a better trader, women or men? Am I going to get in trouble if I say one or the other? All right, let's finish up on Aussie dollar. Let's go down to the 240 chart. Leave you hanging. Come on, I'm a married man. I know better than to give that answer. Who's the better trader? Whatever the wife says, right? So we're down at previous structure right now. We're at previous structure right now. Nice little pin bar down here. Looking left, VS1 zone showing us that this is a previous level of structure support. Again, my blue line is basically lining up with the new VS1 zone that's printed. If I get a counter trend trading opportunity, this is where I'd look to come to, 64.40s. So at this level, looking for one of two things. If we can get an aggressive entry, meaning a level that or a bar that probes that lower line of support and holds, I'll look for an aggressive higher high, higher close entry. Another technique would be what we just talked about earlier, the buy stop in this opportunity if you can get it. If we don't get that, then a double bottom or a double bottom will be an entry. And of course, you can do 26.18 if you want to be more aggressive. I wouldn't have any confidence past 67.40s. That's the extreme that I would be looking for. Just because I'm a support-driven trader, that's the next level of structure support. We do have news coming out soon as well, Canadian GDP. If we break this level, and it's really this lower level down here, this yellow line, then we flip the script and we start gearing up for short opportunities. Questions on Aussie dollar? Let me just get this. I'm supposed to be putting more stuff into the chat. And I don't even have my tier 1 page up. If you have questions, type it in. Give me a second. I'm going to load it up. Latch says, get rid of this chart. It's painful. Sorry. I've got a lot of pain going on in the market too. Pound dollar. It's a max risk trade. So we're looking at AUD USD, potential structure buys at support. Let's get a picture in Aussie dollar. Put it into the pro trade log. If this were a signal service, I'd get a I'd get $1 for every idea I post. And I'd be a much more aggressive trader because I would post ideas. I would buy a robot to post ideas for me. Hey Dion, we're just talking about you and how much I hate you. All right, let's go down to the 60-minute chart. Likewise, man, you don't even know what, you didn't ask why. You don't even care why. Fired straight back. Whatever. All right, so 60-minute chart. What are we seeing here? What do you guys identify? Anything different on the 60? Obviously, we got a high Momo. I love saying that, high Momo. High Momo right here, starting to lose momentum. You got a falling channel into previous structure support. So more clues that we may be seeing a little bit of relief. Now, the negative part of this, and I am stopped at $1. Oh. That hurts a lot. That's what, three losing pattern trades in a row. Not a good stretch for patterns for me. Blah. Oh no, two. One was break even, so I take that back. All right, which ended up then winning, of course. So falling channel in the previous structure support probably decreases the likelihood of a double bottom down here on the lower time frame. But obviously, a falling channel is another signal for another signal for a potential buy. So that falls in line with our higher time frame bias. Going down to the 15, same thing, kind of clears things up. Going down to the 5, it's going to be the same thing. In my opinion, I think your 4 hours is the best time frame to keep an eye on it, unless you can trade these rising and falling channels. All right. Questions on Aussie dollar before we head out for our first break? I do want to take a look at pound. Where are we at on pound now? We broke structure. No, we're still at structure. I can't even revenge trade it and get short. All right, let's put 13 minutes on the clock. All right, gang, welcome back to round 2 of the live room. So far today, we've taken a look at Euro dollar, Aussie dollar. We had an interesting conversation about men and women traders. Let's follow things up by taking a look at Aussie Canada next. This is going to be a very similar situation to Aussie dollar. And again, if you look at any of the Aussie pairs, you saw some pretty significant moves this morning / last night. So let's take a look at Aussie Canada, and we're going to look at the daily chart as usual. Let me actually go out to a daily. And we'll see Aussie Canada, very similar situation to Aussie dollar. Not quite identical. But you can see price action had really created like a channel. We had started trading above that channel, and now we are going back to retest previous structure lows. Now, the one difference between Aussie Canada and Aussie dollar at this point would be what? Again, just going through. Mic dimmed. Mic is fine, guys. Good bet. Good. Okay. Difference between Aussie Canada and Aussie dollar. So Aussie Canada, we're actually trading right now below structure. Where Aussie Canada, Aussie Canada, we're trading right now below structure. Haven't closed yet. Obviously, the end of the day hasn't happened. while Aussie dollar, we're trading at that structure level. Now, difference in the bigger picture is there as well. So if we blind you for a second and go back down to the weekly, right? If you remember, we looked at the overall picture for Aussie dollar, and we looked left and we saw that we were at previous structure. We had like a double bottom and some inside level of structure. Aussie Canada is a little bit different. We're right at kind of the inside level of that structure. Not as, not saying Aussie dollar was easier, but a little bit harder to kind of pinpoint where that next level that we'll go to is. If I had to guess, I would say 88 flat, but a little harder to make a longer term projection on Aussie Canada. So similar, but some small, slight differences in the two pairs. But the same process remains, right? If we can hold this level, then we should be looking for buying opportunities. If this level breaks, then we can look for selling opportunities. So let's go down to the 240 chart. And you can see on the 240, if we look at our lows, which are going to be right here at the VS1 level, a little green box there. I'm going to drag my yellow line to get there. Do we have a lower low, lower close? I think we just, our close is at 88.88. How about that for you? 88.88 is our close. Check your data. Aussie dollar or Aussie data is always a little bit different. Our lows here at 88.89. So we technically have a lower low, lower close by a single pip here on Aussie Canada 240, which means based on the 240 time frame, structure has technically been violated. Now, obviously, you'd love to see a bigger, more kind of aggressive break than that, but rules are rules. Rules are rules. We technically have a lower low, lower close. Therefore, I'm not interested in any type of buying opportunity here. So if you use a 240 as a higher time frame, you got a signal. Yeah, you would have your first trend continuation signal. Yep. Now, you're not really going to have enough. You're not really going to have any room for a retracement because we didn't really break that level of structure. But yeah, you have your lower low, lower close. That would be you'd be looking for selling opportunities and probably ignoring buying opportunities. Now, here on the 60-minute chart, you can see the consolidation that's down here. Again, no interest in buying because we are trading below that structure. However, if you are interested in buying, here's what I would wait for. Let me ask you guys this. What do you think would be a conservative way to get involved in a buy order? Something that will give you a little bit more confidence, a little bit more safety, since you can't do it since you probably can't do it right now. Yeah, you look for a 26.18 type of trade. This isn't going to be a double bottom for me. There's no open space in the middle here, but the same concept applies, right? If price action can push up, take out these highs, and you get a pullback, it's a safer opportunity than just trying to buy it down here when it's below structure. So if you're someone that is looking to get long, you'd have to really, in my opinion, you'd have to take that conservative approach to do so. For a short opportunity, I'd want to see these lows taken out. So for a shorting opportunity, I'd want to see these lows taken out, a little bit more confirmation that we are likely to continue in that direction, and then looking for the exact opposite, where it's going to look like the Mason symbol, and then a continuation down like that. So still a decent opportunity on both Aussie pairs. Right now, Aussie dollar is looking better for buyers. Aussie Canada looking better for sellers. But we'll wait and see what happens with the situation. Jim says 89 psychological level involved there as well. Talking about the highs right here, in which our beautiful wicks are at. And a beautiful 3D2 retracement, I believe. If my eyes do not lie, and they never deny. Right above that. A little bit off. About 5 pips above it. Questions on Aussie Canada? We'll go down to the 15 and the 5. We're not gonna see much down there. Look, take that back. Down on the 15, you do have your double bottom. Now, can you guys see the difference between this and what we looked at on the hourly as far as double bottoms go? You see this open blank space? No, yes, maybe. Here we go. Yeah, so you do a double bottom here on the 15. Now, again, my opinion on trading is it's not the what, it's the where. So a double bottom for me is pointless if it's trading below structure. So I'm not personally interested in it. But you've got one. So you're someone that is a 2618 trader and you technically need that double bottom before your 2618. 15-minute chart's going to be right up your alley. Let's go one more time frame down to the 5-minute. And what will be interesting is to see how this consolidation continues. It's a sloppy one, not a perfect one by any means, but if we continue to kind of push down and create these lower highs, you're also setting yourself up with a descending triangle, which is a consolidation pattern. It's a breakout pattern. In the case of a descending triangle, the anticipated direction of breakout is to the downside, which would fall in line with the overall analysis with the break and close below structure. So that's something you may want to pay attention to on a lower time frame as well. I don't think we're going to see much on a range bar chart, but let me just double check. Take care, Ale. Let me just double check. Yeah, not too much on the range bar chart, but as always with range bars, if you're looking for a more aggressive way to get involved in the trade, you're most likely going to get a signal on the range bars before any other time frame. So keep an eye on it. Keep an eye on it. Could be a decent trading opportunity. Let me just go back up to the 60. And I'm going to put this into our pro trade log. Probably won't make sense to most people, but if they go rewatch the live room, they'll make sense. So Aussie dollar decision point for both buyers and sellers. We're starting at what, the 58-minute mark? 50, full explanation, I need your full cooperation and total attention. Explanation at 58-minute mark of live room recording. Boom, there we go. Dollar yen next, sound good? Or do you guys have a specific pair you want to hit up? Aussie Canada, kill Aussie Canada. Go dollar yen. We're at 108. Perfect. Dollar yen, looking at a big head and shoulders. Looking at a big head and shoulders. Where is I'm missing a chart over here. Sorry, hold on. Where are you at? There you go. Did you get out of dollar yen cipher for front run? No. I actually never got involved, Ali. I took my orders off after the move down, but no, my orders were above the 786. If you guys remember, we can draw it on here. Yeah, you can see it here on 240. Right above these little spike wicks was the entry. So yeah, we came up here and we actually just got above those wicks and spiked it. My orders were actually a little bit higher because of the risk that I had on it. So I just missed by, I think, like 5 pips. I never got involved. Yeah. And I was looking for a secondary touch. We ran down to a few pips before that 3D2. So yeah, I never got involved. Yeah. Yep. I told you it's been a little rough stretch for patterns for me. It was this one I didn't get involved in. The euro yen, the euro dollar and pound dollar loss. A couple in here, 2 euro dollar losses. Pound dollar loss this morning. The euro yen was one that just missed my targets by 2 pips, and then ran back to break even, and then ran back to hit targets. So I mean that one kind of a double slap in the face. So it's been a rough stretch. No, I don't have it as a bear bat, so I'm not entering as that. But I can draw out the bear bat you're looking at. Correct me if I'm wrong. Looking at X to A to B, B to C, C to D. Let me know if I'm right. Yep, no problem. So, bat pattern traders, if you have this as bear bat, entry at market, you're getting a better entry. Original entry is at 108.30. You're at 108.35 right now, so 5 pips of cushion. 5 pips of cushion. Oh, it says, ouch, I have a 6 pattern winning streak. Darn it! We're going in opposite directions. There's divergence between us. All right. So let's look at Aussie. Let's look at dollar Canada. Dollar yen. There we go, Gil. On the daily chart. So we're in an interesting situation here. What we are forming, right? We're down at the zone of the mega wick, right? If you guys can't see the mega wick on your chart, you are blind. And we're actually putting in a head and shoulders pattern. Can you guys see it? The big daily head and shoulders pattern that we're actually been forming. All right, looks something like this. Price action has been bearish. We have a left shoulder. We have a double head, double tête. And then we've just come up and put in a right shoulder. Now, there's a few ways you can look at this. And depending on how you look at it, it may be more or less appetizing to you. Right? If we start off by drawing our 2 horizontal lines of support and resistance, right? I'll just delete kind of the head and shoulders deal here. Your first horizontal, there we go, line of resistance is going to be right here, right? Now, why is this our first horizontal line of resistance? Don't overthink the answer. Yeah, it's our first level of structural resistance. Where is the second line of horizontal resistance at? A little bit higher, yep. So right up here, 109.30s. However, if you're looking at this as a head and shoulders pattern and you're trading using a slanted neckline, meaning a trend line for the neckline, your neckline looks like this. So depending on how you trade this head and shoulders and what your rules are, you may be considering a potential entry soon, or you may be considering a potential entry a lot higher, or you may not be considering a potential entry at all. And I personally fall into the category where I will not be considering a potential entry at all. Right? This line, this upper band is going to be the most important level of resistance for me. I'm not comfortable getting long in between these levels of structure. On a day trade, maybe a small day trade, there's a little bit of room in here. Not a whole bunch, maybe 20 or 30 pips. And then once we break this level, or if we break that level, excuse me, we're not necessarily in a better position, right? If we break this level and we come right here, where have we gone to? Previous structure looking left, right? Because we have these stair-stepping levels of structure where we're structure here, structure there, a little bit of room after this level. So it's just looking in advance as far as like room for opportunity. Aside from going down to a lower time frame and maybe carrying some of that higher time frame bias down there, it's going to be pretty difficult to find a quality trading opportunity, in my opinion, here on the higher time frames, that is. So let's go down to the 240. 240 chart. You can see trading at previous structure resistance, nice VS1 zone. If we break this level, again, there's room up to this higher VS1 zone. It looks a little bit different here on the 240 because we don't have that wick. So it looks like there's opportunity to 109.32s. In my opinion, it's a little bit shorter. It's probably at the most probably 109 even, and really a little bit lower than that, about 108.70. So again, lower time frame, room from 108.50s to 108.70s, 108, 109 evens. Could be a little bit of room here. Higher time frame, not going to do much. And of course, there's always the counter trend trade move, right? You can trade the hold of structure. So you can see price action came up to structure. We didn't probe past it. If I turn my VS1s on, you can see that we did put in a red candle, right? Maybe we get some type of smaller double top in there. Maybe it offers a trading opportunity. It doesn't look like it's going to go that way. Seeing how we're just kind of consolidating up there. But maybe things change throughout the week. Here on the 15-minute chart, again, you can see kind of a retest of structure. Too deep of a retracement to be a double top for me. 5-minute chart. More consolidation. We may be putting in a wedge pattern up here as well, guys. We may be putting in something looking like this. Which would be a sign of a potential breakout. A breakout in what direction? No real bias one way or the other. If I had to pick a bias, I would say bearish, just because of the fact that we haven't broken structure. But typically these patterns are pretty neutral. Nice butterfly in there, yeah. I think we're going to be a little bit, the B leg's going to be a little bit long for that, for a potential cipher if you're looking for buys. Yep. Yeah, so not much working for dollar yen right now. Some interesting potential setups, but nothing that I'm actively looking at the moment. Questions on dollar yen? Anybody watching Canada? The Looney move this morning on GDP news at all? A little bit. All right, see one person typing, so we'll give them some time to type it in, and we'll move on to our next pair. Boom, boom, boom. Boom, boom. Andrew says, Akil, some platforms don't offer a lot of data on the lower time frame to backtest intraday opportunities. Do you use your predicted probable expectancies backtest it on a higher time frame or lower time frame opportunities? You use them on the time frame in which you've tested them on. So if you've tested the 60-minute chart, all your backtesting should be on the 60. If you tested the daily chart for your strategy, all of your back testing should be on the daily. Yep. Different setups do work differently on different time frames, so you want to be careful about that. I've noticed probably about a 10% reduction in the win percentage, maybe 5 to 10% win percentage of pattern formations, example, on lower time frames versus higher time frames. typically you'll see lower time frames provide a lot more opportunity, but the win percentages are a little bit lower because there's a lot more junk and noise. The general rule is the higher the time frame you go, the less noise you get, kind of the more credible the opportunity, but obviously the less frequency. Naomi says you may need to buy more data. She did that with FXCM for a one-off cost. They can get like 10 plus years. Greg says, ARG, sadly got to go. Vet appointment this morning. See you guys on the platform later. Take care, Greg. Take care. All right, let's head over to Euro Aussie next. And if you guys have a pair you want to shoot into me, let me know. I'm kind of going through the ones that I thought would be the most educational for the day. And Euro Aussie was one where we are trading at previous structure resistance. Trading at a most recent level of structure. If you look inside as well, trading at an inside level of structure too. Trying to work up for secondary targets on that bat pattern. I don't know if any of you guys are still in that. But secondary targets would be up at 164.50s. 164.50s, which is actually another pretty decent level. So currently trading at previous structure support. Same type of decision point we had with the other Aussie pairs. If we hold, then this. If we violate, then that. Right? Counter trend traders. Currently trading at a VS1 level. RSI has not gone overbought, if that is a factor for you. This is an area where I would start looking for reversals. Ideally, and this is just what I like to see, I would love to see a probe of that area. No, it doesn't necessarily make the risk reward the greatest, but I'd love to see the market kind of test those highs and kind of prove that there are sellers up there that are kind of lurking and waiting for buyers to try to make their move. The question is, if we're going to reverse off this level, are we looking for a full-blown reversal in trend? Or are we looking for more of a traditional kind of short counter trend move? What do you guys think? What's your analysis say? Matt says a short, more counter trendy type of move. Raymond says a short counter trendy type of move for me. So aggressive with the targets. Yeah, I would say the same. I don't, based on the higher time frame, we looked at the daily, I see no reason to think that we're likely to see any type of extension lower. Therefore, as we talked about earlier, I see no reason to waste any potential profits by putting a profit target lower at a place that I don't think is likely to get hit. So I would say keep it short and sweet. If we zoom in, this wick is not the best for target levels, but somewhere in this 162 even level, maybe slightly above that, 62.20s. Looks like an area you can look for targets. As we get on to a lower time frame, this may be a great level as well, about 162.44s. Nope, we can look at Euro Canada next. So yeah, look, 382 right at that 162.40 level as well, and right above that 162 even handle. Hold on, that's a 3.2 for something else. Take that back. Wrong fib. There we go. 382 is a little bit lower, right above this 162 even handle, and we'll see what this looks like on a lower time frame, 162.40s. So let's go down to our 60. You can see the momentum slowing here on the 60, right? Long slope. And then slowly drifting in the previous structure. RSI did drift overbought, right? Rising channel. This is a prime opportunity for a lower low, lower close entry, in my opinion. If you trade that way, sorry. If you trade that way, of course. Let me get this into our trade floor real quick. This is Euro, not Euro Canada, Euro Aussie. Rising channel into previous resistance zone. I think it's a really decent looking opportunity. You'll see that the risk reward should be pretty good. Again, we don't know where you're going to get involved yet, but you're going to have safety and stop. You have a nice psychological number up here, 163 even. Let's just say you're doing an ATR stop. You're looking at about 163.28, somewhere around here. Again, you don't know where that entry is going to be. And of course, you can always substitute this with what we talked about earlier about using that sell stop. But let's just say we have a stop loss that looks like this. Boop. Let's make it a 10. Thicken it up. Like them thick. There we go. Look at that. Now the question is targets. Obviously, your most conservative level, this is that wick on the higher time frame. You're probably not taking targets right here. So you can look for your little bumps in structure. This was the lower one we talked about, around 162.40s. And then your even lower level, wrong tool, kind of right here at the highs, around a little bit higher than I expected, around above that 162 even handle. And again, I believe you're going to be a 3D2 right at that level. So that's going to be yep. So a decent level right here. I think at that 3D2, 162.13s. So decent opportunity in my opinion. Decent opportunity. If you're looking for secondary targets, right around these lows, 161.73s, 161.50s between that level. Gets a little bit junky down there, but I would say 162.20s is that level you want to look for, or 162.13s around that area. Decent opportunity. All right, 15-minute chart, just wiggling up there. 5-minute chart. Let's look at a range bar chart, and let's go to a higher range bar chart. Let's go to a 21 period. And a 21 period will basically give us it will basically give us a look at close to the hourly. So you can see a little bit of a difference here. Let me just go back to the hourly chart. A little bit of a difference here. On an hourly, we're still kind of up in that level. 21 period range bar chart. No, we don't have the same. We have a little bit of the rising channel right here. You have that lower low, lower close already. So perhaps you get a little bit more aggressive way to get involved. On the range bar chart. Any questions on Euro Aussie? We're gonna head over to Euro Swiss next. Jim, was there a particular time frame you want me to take a look at, or a particular question, or just a general kind of normal top down? Let me sneak away and grab some agua real quick while Jim answers. Good agua. What, you don't call your water agua? What do you guys call it? Water. Yeah. You're so you guys are so normal. What was it when I went over to London? I don't know. What did they call it? What do you guys call sparkling water? Carbon? No, it was whatever they called it, something in the restaurants. Okay, maybe it's too fancy for you guys. Yeah, like I would have understood fizzy water. I would have been all over that. They called it something. It was something or still. It was like still or something else. And I was like, what the hell are you talking about? Still? Still and some other fancy word. And that's when I realized the restaurant I was in was above my pay grade. And I left. I was gonna leave anyway. Your service is horrible over there, guys. Service is horrible. No, we do. We don't have. They don't. They call it sparkling. The restaurant. It must have been the restaurant I was in. They called it something else, and I was confused. So I just said no. Nope, not tap water. I'm all about that. I'm all about the tap water. And I know seltzer. Yeah, it was a word I never. It was a term I never heard before. It was still in something else, but it was weird to me. So I said, "Good day, sir," and left. Threw on my cape and left. But anyway, your service is horrible over there, guys. Just want to let you know. It makes sense why, but your service is horrible in restaurants. Horrible. Well, what's called actually explained this to me. It was Dan who explained it to me because he was in he was moving from the UK to the US. So he experienced kind of the opposite here in the US, right? Yeah, it makes we're so you guys don't accept tips. At least that's the impression that I got, right? Was there was no room to accept tips. There was no tip on the thing like gratuity. It was weird. Because here in the US we pay tips, right? So but you guys don't accept tips, but they get paid a lot more. That's what I heard just in our conversations. So because there's no kind of extra tip, there's no real motivation to work harder. Is there? There's no motivation to be more friendly because we do. Okay, well, not the plate. All of the places we ate at, no one accepted a tip, and like me and Darren were trying to. Like we had our card out, usually the card out, and we're like, hey, where do I put I leave it on the table, what do we, and they were like, no, sir, right? So all the places we were at, there were no tips, and we ate a lot. And I was talking to Dan about it. He was like, yeah, the tips aren't normal, but the waitresses and waiters get paid more. Where in the U.S., waitresses and waiters get paid like crap. They get paid like nothing. But they make most of their money off of tips. So therefore, if you make most of your money off of tips and you know that you get tips the better service you provide, what are you more inclined to do? Probably work harder to earn that tip. Because every place we went to was just like, maybe it's our American, just kind of instant gratification way. Like we were waiting for the first spot we went to, we waited 20 minutes before anyone even took our order. Like I'm doing all the signals, I'm sitting there, yeah, honey, I know what I want. Do you? Oh, you're good too? Okay. Like loud and dramatic. Do you remember where you went? Many places in the city, many places around the hotel, many places out near, where do we go for Legoland? Near the castle. So we went all over the place. It was just in every single place, same way. But yeah, it was, the service was a lot slower and laid back. which in our typical American fashion, we were just sitting there itching like, yo, come take my order and then come take my tip. Like, serve me fast and let me give you more money. And it made sense when I was talking to Dan after the ball about why that was. Because he noticed the same thing over here in the States. It was the opposite. He was kind of like, the service was so quick and it was weird. And then they wanted me to tip them. I was like, hell yeah, they did. They wanted that 20%. But that's what I noticed, and I didn't like it. Because when I'm hungry, I want to eat right away. I'm not into the enjoyment of it. I just want to stuff my face as fast as I can with as much food as I can possibly put in there. That's what I want. You didn't have to take my order. Just give me food. Just pretend you know what I want. Just put food on there. I'll eat it. I don't care. So yeah, service was slow. It wasn't bad. It wasn't necessarily bad service everywhere, but it was slow. I'm moving to America. It sounds great. It is great. Yeah. Yeah, I mean, it's totally unhealthy. But now we got the fake meat burgers, which are going to kill you just in a different way, but you feel better about yourself. You know, get that Beyond Meat going on. They got one where they put in, like, they infuse it with beet juice to simulate blood, because that's what you want in your veggie burger, blood. But I was actually looking into when the whole thing started. When I first heard about it, because my uncle told me about it a while back, and I've got some like vegan friends that heard about it. I was actually interested in. So here's what I would do. If I was still active in the stock market, right, I would have went on an all-out assault. What do you think I would have looked for? Let's put it that way. As an investor, let's talk investing, right? What do you think I would have looked for as an investor? Vegan companies, nope, that's what you think. That's what you think. Vegan companies, right? You got the big ones that are coming out. Then you look for all these other smaller ones. Nope. Pork bellies, nope. Yep. I would look for the grain companies that provide the ingredients to these burgers. So I would look for I'd have to do research on whatever it is made up of. And there was one that I found, and I just, again, I wasn't actively doing anything, so I forgot about it. But I would look for whatever is in these ingredients, in these burgers, right? I would look for the people that provide that to them. Because what's happening is now they're benefiting on both levels, right? These people that are selling grains and soy or whatever it is that make up these burgers, right? They're already providing it to farms for feed, for the cattle and whatnot, or whatever animals they have. Now this has opened up another revenue stream. Because now you're providing it for really consumption with these Beyond Meat and whatever companies that are making these fake murder patties, whatever they're called. I shouldn't call it that. I never had one. But does that make sense? You look for the company behind the company, because typically those are going to be a lot cheaper. Now again, I don't know if that was doable in this situation. It's looking at more of the commodities market, but that was my initial intention. Because you know that even if it's a fad, it's going to blow up quick. I mean, this Beyond Meat thing is crazy, right? Again, you got Burger King is doing the Impossible Burger. You got McDonald's coming out with one, right? All of these fast food restaurants, right? They're all looking for this vegetarian equivalent so they can bring in more people, right? If you're a burger joint, right? You're not bringing in people that don't eat burgers. That's why they went out to chicken. That's why they went out for salads and all this other healthy stuff, right? What better way to get a different demographic into your store than offer a vegan or vegetarian equivalent? So they're jumping all over it. And when you have a big company that jumps all over it, you've landed your big contract, right? You've landed your big contract, which means they're now asking you to up your production by whatever many amount. And if you're upping your production, you've got to get your materials from somewhere. And it's typically one of the small fish, right? The bigger fish are eating the small fish. And then the even bigger fish are eating the bigger fish, right? So as an investor, I used to look for the small fish because it costs a lot of money to be in the stock market. I know I've heard you guys talk about some of it's leveraged now. Back when I traded, it wasn't leveraged. So if a stock cost $80, I had to have $80 to buy a single share. It's a lot of money. If you really want to make a dent, right? I'm going to buy 2 shares. What's that going to do for you? Nothing, right? So I would always look for the smaller companies instead of looking for the companies that are, 50, 60, 70, 80, $90. You look for the smaller ones that you can get in the teens or maybe the 20s or maybe perhaps even lower than that. And they're going to ride the coattails. That's the difference between the Forex market and the stock market. The stock market is really trendy, right? Typically sectors move together. So if all the momentum is moving in one direction, right? There's a lot of those little fish that are being sucked up right in the jet stream going right with it. Going for the ride. Yeah, not necessarily penny stocks. Those are a little bit, I failed at penny stocks, but I didn't know what I was doing. So maybe not necessarily penny stocks. I think those are a little bit more risky. But if you know what you're doing, again, boom. But like just cheaper stocks. You can find stocks out there for, in the teens. $11, $12. You can find quality stocks out there for that. You make a move from 11 to 20, right? Doesn't seem like much, but guess what? You almost doubled your money. Jim said for more than a century, the people of Archer Daniels Midland Company have transformed crops into products that serve the vital needs of a growing world. Today, we're one of the largest agricultural processors and food providers with approximately 40,000 employees. Yeah. Well, let me just check that real quick, then we'll get to your question. Let's just check that again. I'm not familiar. I didn't dig deep into it, but it kind of brought me back to my days where I was like, "Ooh, this is what I would look for." Because I was having a conversation with. Remember, I always tell you guys stories of my trading partner that failed because he was great at building systems, but like psychologically he's a mess. Yeah, so he's more into investing now because he can't actively. He's working full time. He's got 3 kids. He doesn't have time to actively look at the chart, so he's doing more investing. He's the one that gave me the heads up on the AMT, which is shoot, yeah. He needs to give me a kickback for that advice. But this bad boy. But he does a lot. We talk a lot about investing now because he's having really good success with it. So we're always bouncing ideas off of each other. And he's always like, well, yeah, I like this stock a lot, but like, man, it costs too much, and I don't really want to blah 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 blah. And we'll just find the little fish that's attached to it. ADM. Archer Daniels Midland Company. So of course, in stock is a little bit different, guys. I always want to do my IMIP in stocks are fundamental based. So I know in trading and in Forex trading, it's in trading and investing in 2 different beasts. In trading, it's all technical, right? Chart. IP, higher time frame, right? DE, lower time frame. Investing, I do want to have a technical, right? That IP, identify, predict, that's based off technicals. Fundamentals. Do I value this particular stock from a fundamental perspective? Then, if that's yes, then we head to the charts and start looking for reasons for entry. So this is on the weekly right now, real quick. And you're seeing kind of the beginning phases. This is the Archer Daniels Midland. Seeing the very beginning phases of like a wedge pattern. So there could be some consolidation here, yeah. Yeah, and it's and I would tell you what, it's not my philosophy was just trade what you know. So it wasn't, I would always do stuff. I leaned on common sense, right? I leaned on common sense where I wasn't venturing off into like bio stocks that I knew nothing about. right? I kind of leaned on common sense, like we just talked about, where it's like, this is doing that. This will probably do that, right? And then you dig more into the companies and stuff that you're familiar with. So it wasn't just venturing off into weird places. It was always common sense first and foremost. We're like, hey, like, does this make sense just from a basic standpoint? Like, if it does 1 + 1 = 2, and then it's kind of digging down into your different options and saying, okay, well, which one of these is the best? So, like, I had a perfect example, which is very similar, was one of the best stocks I traded multiple times. It was called Joy Global. I don't even think it exists anymore. It was a mining company. And so I wanted to get involved in, I don't know much about mining, obviously, but just being aware of the world. I know that China does a lot of coal mining, right? They're in the main place for that. They were looking for a new contract. And they were, basically they were deciding between a few different places, right? Joy Global makes mining equipment. So I had a few different options on the board, and it was looking, as soon as I got the kind of the notice that, hey, like, Joy Global had kind of won that contract. And this wasn't something that was going to happen until like 3 years later or 2 years later, but Joy Global had won that contract. It just made sense. You have the number one mining country in the world. They're going to be doing a lot more mining. You got a place that produces mining equipment that had just won a contract with a major place in China, right? You see how it's just like 2 and 2? And then just make sure the company's healthy, and then you take a shot. And I got in, again, well in advance. At like a year in advance I got in. A year in advance, and then like a year before it happened, then all the headlines came out. Who, Joy Global, blah, 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 beats whatever they were doing that. And then it just took off. And that stock, I think, went from like 30 to 70. And then it went down to 17. And then went from 17 to 50. It was a decent. It took time. This is over years, but it was pretty decent. It was a pretty decent ride. I got it from 30 to 70, and then I cashed out not all of it, but most of it at 70. And then as it went back down to like 50, I cashed out the rest, and I revisited it again later when it was like 17, and got it again. Now the second time in, I was just like, this thing it's just cheap. Like, this was during the recession, so everything was just falling. So that it was just a value play at that point. I was like, this thing is just too cheap. Buy it. There was no research done on that. It was just like this is a value. Like, and you're gonna see this when we have our next recession, guys, or when we have this big economic just like crash and everything gets cheap. You're gonna see value plays out there. And I would start off, if you're kind of new to investing, start off by looking at your blue chippers. Just look at companies that don't fail. Like, you can probably list about 10 of them. 10 of them right now, companies that will never fail. Like, will Microsoft ever fail? Will Apple ever fail? Right? Google, Starbucks, right? These things aren't failing. So they're going to be really, really cheap. Again, as the stream kind of destroys everything gets sucked into this downward spiral of like panic and the world's over, right? These things are going to be at a discount. And it is no different than going to a store that's having a clearance sale, and you see stuff that you were going to buy, that you would buy normally for full price, and you see it for 50% off. Whew, buy double. Buy double. Don't get sucked into the panic, right? Remember, you want to be the minority. You want to be the minority. When everyone else is panicking and running, everyone's running from the store that's on fire, right? The store is on fire. Let's run away. Like, run in and start getting stuff. And you may have to wait it out for years. And it may go cheaper, right? That's the biggest thing people face, where it's kind of like, well, like, what's Starbucks at right now? Just as a random example, right? So Starbucks is trading at 88 right now. And like, let's say everything goes bad and Starbucks goes down to like $50, right? And people are going to be like, oh, blah, 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 that's too expensive. Well, $50 is more than, or is cheaper than $70. Or what if it keeps going down? Oh, it went down to 48. Oh, it went down to 40. Well, you still got it cheaper than what you would have got it anyway. Like, you're not going to catch the bottom. I think that's the problem that traders make. They want to catch the bottom. Like, I want to sit here. Naomi wants to sit here and catch the absolute low. I want to catch the absolute low that Starbucks is going to be at so I can get the best deal. Do we try to trade bottoms and tops in trading? No. Here's the secret, right? You never know that a bottom is a bottom until after it has become a bottom. You never know that a top is a top until after it's become a top. Right? You don't know that this is the high until it has clearly reversed off that high and didn't return. And by then, you're already $20 cheaper. So you don't need the best deal. You just need a good deal. You just want to be involved at discount, right? I'll give this last example, right, before we move on. There were a lot of stores closing, right, because kind of the malls are dying and dead, and there was a Sears that were going on. My wife hits me up. She's like, I was walking through there just like a vulture, just seeing like, what is cheap? What can I buy, right? And she sends me a text. She's like, hey, do you think Jaden would like a trampoline? And I'm like, hell yeah. I mean, I'd like a he would like a trampoline. Yeah, I think he would. I think he would like a trampoline. Yeah, of course. I was like, and me, I'm like, how much? How much is it? And she was like, well, it's like, I forgot the amount, but let's say it's like, oh, it's like $200. I'm like, but normally it was $400. I'm like, oh, okay, that's a good deal. I'm like, okay, yeah, go get it. So she's like, and my wife's a bargain hunter. So she's like, oh, we're gonna wait and see how low it gets, because like the store's going out of business. So you would think, right, the last day that the store is open, they're just throwing stuff away because any profit is better than no profit. Liquidate everything, right? So she goes on the last day. In the last hour, I'm at home like, we gonna get a trampoline. We bouncing and flipping. I'm all excited. And we come back, right? I'm all at the door like, where's it at? I'll put it together right now. And she's like, yeah, it's, it was sold out. Why was it sold out? Because people got it at a good price. She was waiting for the low, like the absolute low point, the last hour. And by the time she went, it was gone. Whereas if we would have went maybe a day earlier, maybe we would have got it for $200, and maybe the price would have ended up dropping to $100 the day afterwards. And you can be like, you saw it, and maybe your friend gets one, and you're like, oh, I got it for $100, I got mine for $2. Oh man, could have saved $100. But you already saved $200 from the original price. You already saved it. So if you valued getting the trampoline, it was a deal at $200. It was a better deal at $100, yes, but it was a deal at $200. And you're still getting it cheaper than what you initially valued it at. And stocks are the same way. You don't have to get the absolute bottom. Find a price that you value it at. And if you have extra capital, if it goes lower, buy more. Buy more. If you like Starbucks at 60 and it goes down to 50, buy more. Average yourself in. Shoot. So, anyway, I don't know how we got on that. Talk about how bad London service is. That's how we got there. Naomi says, would you do that just because it was long-term holding? If it was short-term, well, if you're a trader, it's different than an investor, yeah. So if you're a trader, it's different because, in my opinion, a trader is you're more like a mercenary. You're kind of looking to get in and out. So as a trader, I would lean more on the technicals. I would certainly take the fundamentals into account, but even then, you're not really looking to buy and hold. You're identifying two levels on a chart, and you're saying that I think price is likely to get here before it goes there. And then once it gets to that level, you want out. Invest in an investor, you're taking more of an investment. You're kind of taking like a personal side in it. So a little bit different. There's still going to be trading opportunities, don't get me wrong, but it's a little bit different than, the mentality is a little bit different than in investing. You got to be a little bit more spot on in your location for trading because obviously you have tighter stop losses. As an investor, you're banking long term. So you don't really care about being in at the point of reversal. You care about being in at the right price. All right. Let's go to Ollie says Aussie Canada or Aussie yen, excuse me, potential bat at 240. Let's do one more pair real quick. I did say we were going to talk about Euro Swiss, and we never got there because I got on to blabbing for the last 20 minutes. But hopefully it was an informative blab. Real quick, Euro Aussie is breaking through that level, so it doesn't look like you're going to get that lower low, lower close there. No, Euro Canada. Sorry, Euro Canada, not Euro Swiss. Euro Swiss is what I had on my radar. Euro Canada. And remind me, Jim, what we were looking at. Naima says, I'm only here for the blabs. Looking for a return to structure on the hourly. So, Euro Canada, you remember your nice bat pattern here, still working. Gave you a little bit of a scare, but still working, right? Let's go and delete some of this stuff and let's see where we're looking at. Price is working its way towards structure. Two levels of structure stand out for me here on the daily. A little small minor level right here. And if we push a little bit higher, a level right here. Looking very similar to euro dollar. By the way, what's euro dollar doing? I should be tracking that. Anything euro dollar? Nope, still hanging in that same area. Being dumb. All right, so let's go down to an hourly chart here. Sorry, this is that was the 240, not the daily. Let's go down to an hourly real quick. And you can see price action coming back up into a nice shelf of previous structure. Very good area, Jen. Very good area. He said, I would like a probe to 145s. Yeah, I think a probe, maybe not that high to 145s, but a probe to this area would be good. 144.89s. Obviously, 145 is a psychological number, but I feel like that would also kind of, well, depends on how far you're shooting for targets. The problem for probe to 145 may mess up the targets a little, or the stop loss a little bit. Meaning if we probe up here, and obviously that depends on how you're trading. If we probe up here, stops should need to be above this level. If stops are going to be above this level, they probably want to be above these highs as well. But yeah, a probe of a psychological number is beneficial. Not as great as a probe of structure, but any sign of a hold is a positive. Yeah, I have a sell limit below 145 with limit above structure. All right, so is there what is your reason for entry? Any specific thing you need in order to get involved in this trade? Jim says stops are above structure. Purely structure based. Okay, yeah. So what tells you where to get involved? Like what if I were following your trading, how would I know when to execute the trade? I'm still here, guys. Don't worry. Computer didn't blow up. Simply watching previous support change the resistance. Was like, okay, yeah. So that's your reason for wanting to be involved in the trade at that level, which I think is great. Now we're talking about the execution. How do I know when to get involved? Yep, and that's yep. You want to have good risk reward. Yep. So how do I know when to get involved? Again, imagine you're teaching me your trading style. How do I know when to involve myself in a trade? Right. I like the level. You told me good. The stops are above structure. I think it's a very smart place for stops. We haven't talked about target yet, but yeah, what am I looking to get involved? So here's a good example, right? So Andrew brought it up. So if Andrew's looking to get involved in this trade, he may say something like this. If RSI goes overbought, then he looks for lower low, lower close candle. If he gets lower low, lower close candle, then he enters next bar market. So when Andrew explains it to me that way, I know exactly what I need. Okay, I look at the RSI. All right, we went overbought. Now I need a lower low, lower close, right? That's something that is definable. So I know that a lower low, lower close would be down here. Okay, if we get that lower low, lower close, he says then enter next bar market. All right, then enter next bar market. So something that's consistent and that can be followed. So that's an example of what I was talking about. Once price gets into that zone, once price action probes that 145 level, how do I know when to push that buy button? So place limit order right below psychological level. Okay, so right now I put a limit order right here at 145s, right underneath 145s. Let's walk through it step by step. Okay, all right. How low below 145s? How low do I go below 145s? 1 pip, 2 pips, 3 pips, 4, 5 pips, ATR, 18 pips. Usually so we want to take out the word usually. So I go below 145, below psychological number by the spread. Is that fair to say? Just buy the spread? Again, we just want to practice making it rules based, right? If we're not rules based, it's hard to be consistent, right? Once we get the word like usually, sometimes in our trading plan, it means we're kind of all over the place. All right, so after you identify your level, your zone, right? Find the most relative psychological number, right? If I find psychological number, then I place orders 1 spread prior to, and then front run 3 pips prior to that spread. Are we on the right track now? I think that's it. Just want to make sure. I want to confirm. Yep. All right. So we have our orders here. Now, before we move on, does this make sense about having a process in which to go through? It's all about consistency, right? And I always preach this. I say, when we're developing our trading plan, it should be so detailed. I'm not sure if you saw last Monday's Q&A. We're going to do it again next Monday. We're going to break down, Andrew Curry sent me his trading plan. We're going to break that down. We did it for Santosh last week. But your trading plan should be constructed in a way where your grandma, who knows nothing about trading, and I always use grandma as an example because my grandma knows nothing about trading, but someone that knows nothing about trading can follow it. And when it's rules-based, that means it could be properly back-tested. When it's properly back-tested, you can find historical performance. When you can find historical performance, you can see if what you're actually doing works. If you see what you're actually doing works, it allows you to gain confidence. As you gain confidence, you're more likely to be more consistent in the markets when trading real time. So it all works into each other. But when we're just kind of picking, it's okay to pick zones. That's fine. That's a skill in its own. But if we don't really have a reason for getting in, you're kind of just like, yeah, I just like that level. Again, there's no consistency. Or it's going to be a lot harder to be consistent. And there's a simple formula to success in trading. Consistent actions, or consistent analysis plus consistent actions equal consistent results. So I would say this, that the next step that I'd like to see you do in your trading is take what you're doing, right? Hopefully you've back tested. Hopefully if it works, it's had success. Take what you're doing and just work on making it rules based. Work on defining rules for it. That way you could be as consistent as possible, right? Does that make sense? And that way we eliminate as much subjectivity as possible. There's still going to be subjectivity in our analysis. There's always that. But we eliminate as much subjectivity as possible. We kind of know what we want when we get there, and we kind of take that emotional aspect out the way. So now, right, when it gets to 145s, we're not like, ooh, maybe I should, maybe I shouldn't. Now it's kind of like, do I have this? Yes. Do I have that? Yes. Boom. We're in. and we become more robotic. So work on making it rules based. I think you'll see a massive difference just in the consistency of your trading. Not always easy to make it rules based, especially for those of you that have more freedom. But I'm a believer if you're trading something, if you're trading a consistent strategy or technique, you can make it rules based. Your rules may be loose. Your rules may be loose. You may have multiple rules. You may have. I have multiple ways of entering a trade. And we talked a little bit about earlier, even adding like sell stops and buy stops to it. But it's all still rules based. It's all still rules based. All right. Dan says Aussie Canada question mark. This is Euro Canada. Dan. Euro Canada. Aussie Canada is what? Blowing past structure. We busted out of the lows. Yep. Time to look for trend continuation. Yep. Let's take a look at it. Let me get that out of there. Yep. So remember Aussie Canada, we talked about this level right here. Two different scenarios, break up, retest, break down, retest, right? Obviously, we've broken down. So what do you think is the next thing you guys should be looking for? Yep. Pull back. Pull back trade, yep. Look for the pullback. All right, we have two choices, guys. We can take a break and come back for maybe a half an hour, or we can just kind of run through a few other pairs and call it a day. I'm kind of leaning towards that, but let me know what you guys think. Yeah. Run through, okay. So I had one more on my radar, and which was Euro Swiss. So we'll take a look at that, and then if you guys have anything that you want to take a look at, let me know. But Aussie Canada, yeah, that's a good sign. That's one that's on the radar. Is Aussie dollar following the same suit? Anybody take a look at that? Yep, Aussie dollar is doing the same thing. So yeah, so same setup. Aussie Canada, Aussie dollar, both in trend continuation mode. My guess is you can look at any of the Aussie pairs, right? We saw Euro Aussie, same thing that broke out. My guess is Aussie weakness, man. I think bearish Aussie is the side you want to be on. So whatever Aussie pairs you trade, and I know we've been looking at Aussie Canada for the better part of almost a year now. Finally, I'm a tea person, Naomi. I grew up on tea. We had a nice English upbringing. We had tea time and everything. Yep. We had to stop what we're doing and drink tea. A traditional English upbringing. You didn't know that, did you? Then I went to the dark side. Yeah, my mom's Jamaican. So if you know anything about the Jamaican culture, it's basically the English culture, right? Yep. Yeah, with better food. There you go. It's the English culture with better food. Yeah, you guys have English muffins. Isn't that English food? What are you fish and chips? That's what you guys are known for, right? What's it, hamburger? Is that American? Hamburger? Well, Australians are English people too. Americans, we'd be known for hamburgers. If that was our one thing, I want to see that actually. I want to see like a world map. I'm sure I can find it on the internet. I can't be the only genius to think about this. Find a world map with like a display of what each country is known for. Yeah, Americans has to be. No, we're not British. We're better British. Get that correct. You know why we're better British? Because we won. Yeah. We did win. What? We said, nah, we ain't having it. Oh, you want to fight? Okay. And the rest is history. I'm just saying. Little brother beat big brother. It's all good. It's okay. It's all right. Second place ain't that bad. I'm just speaking facts, guys. Look, I don't personally feel this way, but I'm a trader. I'm facts, past performance. We talked about this earlier, right? I'm just speaking factual. I wish it didn't have to be this way, but it is. But we give you guys small wins. We let you guys get us in rugby. We let you guys have us in soccer. We give you guys some small wins just to, keep the morale up. We don't want the... Look, it's not football. You guys originally called it soccer. So let's not forget that. It was an Oxford man that invented the word soccer for it, and then it changed to football, which makes more sense. But you guys called it soccer. So let's not blame it on us. It was you. Trousers is just a weird word. Why would you call anything trousers? Pants. Every other language is very close to pants. Right? Pantalones. Pantalon. Right? Why are you? Trousers. What's wrong with you guys? You want to make things difficult. You create soccer, the word, and then you change it back. Yeah, that's my point exactly, Naomi. You guys are wrong. You have weird names for stuff. Yeah. Look at French. Look at Spanish. Look how they say pants there. Who's different? It's okay. Like I said, you guys said some cool things. You got what do you guys got over there that's cool? You got yeah. Hold on, quick. We'll do a Google search. Google. What is cool about the UK? I can't find anything. Even Google's not helping me. Okay, I'm sorry. I just can't. I can't. Let's go back to the charts because this is like trying to test a strategy that just isn't working. You guys got Greystone. Greystone was cool. All right, let's head to where are we going to next? Euro Swiss. I want to go to. Euro Swiss. I liked it over there. I'm just messing with you guys. I enjoyed myself. I enjoyed the other side of the pond. It was fun. All right, Euro Swiss daily chart. Just write this down. Euro Swiss. Not much during the day. Let's work down to the 4 hour. Okay, so nope. The next level of structure that was on my radar for this. I'm not even actually sure why this is on my radar now. Short set structure. Yeah, if we return to this level right here, this zone right here between about 109.11. 109.11 and about 109.29. It's going to be the next level to look for potential shorts. The problem is we're kind of, we violated previous structure. We're kind of right at the lows of that zone. And now we're already retracing. So it doesn't look like we're going to be able to get that move here. So that's going to be kind of out the water. Now, speaking of retracement, Aussie dollar is retracing right now. So if you guys are watching on the 60, we saw a big move down. We're seeing a big move back up. We did have ISM PMI come out for the dollar, which could no doubt be causing a little bit of a reaction. We're seeing the same thing in euro dollar, a move back up. So let's just double check on those pairs. Those were a few that we were watching. Let's go Aussie dollar 15. So you can see if you're looking for a trend continuation opportunity, Aussie dollar 15, we're coming back up into that previous level of consolidation. Perhaps go down to a range bar chart, start looking for, see if there's any reasons for entry. Here's a good example of kind of the mess that's been happening down here on Aussie Canada 5 range. Things have been moving a lot. We don't have Trump. Yeah, well, there you go. We probably don't have him for much longer either, though. But here's a look at Aussie dollar again, just a blatant retracement. Let's just see 5 range. Let's go to a 13R here. It'd be a good sign for shorts if we can violate these lows. I think this would be a really decent 26.18 opportunity. We violate these lows, we get a retest, and then look for a secondary reason down. That's going to give you an opportunity to get involved in a move, go into previous structure. You can also get stops above the highs. Let me just see what we're doing here. This is just 1 bar and 15. So we're a little bit lower than that ideal zone. I know our lows, our previous structures right here at 66.87, but our most recent structure is a little bit higher. So let's go 66.94. 66.94, those lows. So right below 67 flat. Yep. We're going to see that on the range bar chart. Yeah, so this is that level on the range bar chart right here. So it'll be interesting to see what happens if price reacts to this level. Range bar is not giving us the best view of things, but if you can keep an eye on, say, like a 15 or a 5-minute chart, look for that 66.96 level. This is going to be a situation where you want to have stops above this consolidation, right? You want to have stops above 67.10s. And then shoot for that, either that first level of structure down at the lows for target ones, or if you're more of a trend following trader, shoot for that full extension. Shoot for that full extension. Aussie Canada is going to be very similar. Well, I shouldn't say that. I should look at Aussie Canada first. 13 range. Yeah, so similar situation in Aussie Canada. A little bit below that previous structure. That's at 88.15s. 88.15s. Now going back to the euro dollars, one of the first pairs we took a look at. We're waiting for price action to reverse at that zone of wicks. You can see that we have violated it, right? So the idea of I guess we haven't violated it yet, but it looks as if we're going to violate it. So the idea of getting short at this level, it's probably going to be out the window. So the next highs on euro, the next level on euros we want to see tested is going to be this zone right here. Basically about 109.30s up to about 109.65s. But not a good sign for euro shorts. That opportunity is just going to be gone now. Yep. PMI, ISM PMI, ISM manufacturing. That was the big one at 10:30. Unless something else came out. I know we had a bunch on the radar today. A lot of Fed speakers as well. So it could have been one of that. But I know ISM was a main component that was on the radar this morning. And you can see a negative number right there. So that's it. That's your dollar weakness right here. Because all of these guys spoke earlier. Any other pairs you guys want to take a look at, or any other questions that you guys have? Look at that, big gaps, big push down on dollar yen. I'm gonna have to reload all my data. We're getting all these gaps. Last says euro long on lower euro pound long on lower time frames. Oh, this is the bat on Aussie yen. Okay. Latch is looking for longs in anticipation of a move up to around this area, 89.70s. Latch. So you see, we just broke out of this VS1 level. Classic pullback and trading opportunity to the high side. We look quickly on a 13 range bar. The question is, was there any opportunity to get long after the break? And was kind of a straight run up there. So even a range bar chart, well, that's maybe a 5 range would have given you a different look. Even a range bar chart probably wouldn't have given you much. If you're looking for a pullback, this is going to be your first level right here. This zone right here, right? And then stop should be below the lows of this mark if you're looking for a pullback on euro pound lower time frames. You're not going to have a problem with the RSI going oversold, I can tell you that. And now you're getting your consolidation there. Crap, yeah, sorry, 50 range, that's why. I was wondering why I was moving so fast. Yeah, 50 range, that's why. Take it back. Take it back, a little bit different, yeah. Good catch, yeah. Used to be 5 range, Ninja 8 does this whole, 100th of a pip thing. So it's 50 range. I kind of went back to old habits, just doing the 5. That's why it looked so, I'm like, why is that moving so quick? That makes sense then, yeah. All right. Lastly, let's take a look at Aussie yen on the 240. We're looking at a bat pattern on Aussie yen. Let's kind of clean up the mess here. And we're looking at a few of them we can be looking at. I'm guessing you're looking at the small one. X to A to B, yep, B to C, and a potential CD completion down here. We got to find that 886. I must have clicked the wrong mark there, but worry about that later. Right at 71.51. So Aussie yen, bull bat, 71.51. Ali says also a nice 1-to-1 measured move. All right. Head and shoulders on the range bar chart for Aussie dollar as well. And this should be this has got to be 130 then. I must have been doing that all day, yeah. That should be 130, yep. Because I had 21, that should have been 210, yep. All day I've been doing that. I forgot to add those zeros, yep. So a little different story here. A little different story. My apologies, guys. I've been messing up the range bars all day. Forgetting the zeros, I had a Ninja Trader 7 moment today. All right. Anything else? Nope. All right. As always, I'll get the recording up to you later in the day. Typically takes me a few hours. I got some errands running, some bills to pay since it's the first of the month, and some bills to collect as well. But I'll see you guys on the platform. Thanks for a fantastic day. And until next time, plan and trade, trade your plan. Take care.